Good afternoon. This is a little video about strategy, order flow, market condition, the bonds, and then the soybean trade that I'm taking currently. So let's start with strategy. In the mornings, in my private channel, which the link's at the bottom, I share a lot of order flow from the expiration date of Friday, but also most of them that were sent from Monday through the day that we are currently in. So today being Wednesday. In the morning, I did see in ISOI Tesla, Tesla puts, but it's an ISOI. So I will reverse that, send it as a call. The expiration date is Friday, and it came in, I would assume yesterday, somewhere thereabout, because I sent this in the early mornings. That means that came in the day before. It came in on the 16th. Now you could have entered on the 16th to see it came in, right? Or 15, 16-ish. If it came in Monday or Tuesday right at the end, or Monday over here. Now, if it did come in on Monday, now it's up significantly, right? So came in at 10:50. Is that what it says? No, 10:03. Yeah, 10:03. So that would be Eastern Standard Time. So for me, it would be 9. So it came in right here, right? If I do that, it would be up 3% on his order right off the bat, which is in 23 hours, 3.7%, nearly 4% on Tesla. That's almost 400% on his order if you send a call. Reversed it, which is what we're doing with the ISOI because it's a sweep. It sweeps the order, which it did, and the order was sent at 420.52. So 2052 right here. Basically, that was the sweep. These were sweeping orders to send the price higher. That's a 4%. Now, considering I sent it yesterday, you would expect a little bit of room left. You can either target, if you enter here, you can say you buy, and then you put it yourself at the bottom, or even here, honestly, because ultimately you're either wrong here or you're very much wrong here. So you have all this room to get a pretty decent R on your order. You can either do that here, or you can go for the moving average for a higher R, or you can go for the 200 moving average. And then within 12 o'clock, you're pretty much done with 3%. Now, if they held it and really target the liquidity that was left here, which it was already swept prior to it, and they were all bearish orders, so technically it's risky, but at the same time, there could be more liquidity left up there. Ultimately, not almost reaching your point to take profit right at 3 in the morning on the 15th. Which now I'm on a replay mode. Now that I can show another strategy linked with the correlation of a ISOI order. Now that we have our order, all bullish liquidity, and this being in the pre-market, Next candle is the market open. What I'm gonna do is slow that down to make sure I catch that properly and I have time to explain. Now that we're in an order, let's say you're targeting higher, or you exited at support, which is almost there. That would be, in itself, it would be a valid trade just from the ISOI that was sent on Friday, sent on Monday for Friday. Now, for the strategy, you want the opening candle. It's a rule of 4. You want to wait 4 candles before you enter. And on the 4th candle, the 5th candle, wherever it breaks, will be your side. Now, obviously, you had a high sweep at the previous support. That's 1, that's 2, that's 3, and that's 4. You have 4 candles, so 1, 2, 3, 4. Break higher, long, break lower, short. So break higher, since this is the body of the closing candle, and then break close, I would target 50T just because it's right there. And what you can do is just wait for the trigger. Now I'm placing them ahead just to be, if it breaks higher, it'll trigger up. If it breaks lower, it will trigger down. Now we are, I believe we are long because it closed above. So yes, we are long. And there you go. There's that. This trade literally in one candle gave you massive, and it shattered the TP, which technically, as the candle retraced, you would have ended up doing a, what, 2.29R, even though if you had the swing high, you'd still make 1.4. Ultimately, it's not a bad deal. But that's a valid trade that was done. You see there's a retracement, and you can see it's heavy, and the volume is coming down. And it's not a it's not a divergence. That means that this would be a manipulation, and this is the distribution, because the volume is subsiding to the it's exhausting. And then you can have your trigger over here from the AM, from the 4th candle, and have the, oh, that would be a break. Yeah, this one would have failed if you had, that's pretty wide. It's still a 2, but that's still a pretty wide on option. Ultimately, the short was iffy, but the rule of 4 to the upside ended up getting an instant take profit from the swing high. Obviously, if you had a wider stop loss or here, but even here, if you go push it here, then you're at one, you're in the 1-to-1, right? So it's an equal ratio, which it's not bad, but at the same time, being an option trade, there's a possibility of doing that, or not even having a stop loss and just letting your premium basically be your stop loss, which is sometimes it's a lot of what I do is I just buy a premium within my risk parameter, and then I just sacrifice the premium. It's either going to profit or it's going to negative 100, right? because ultimately that's a risk that I'm ready to take on the trade, that my stop loss is not just because of a swing. Now see how it swept it and then I would have been kicked out, but the trend continued lower and clearly did what it needed to do. What I want to show you, NVIDIA, have market open. Big downfall. One, two, three. That's the fourth. Now you have the fourth. So your range high, your range low. The fifth is an inside bar. Same with that one. Now you have a break. Now, because this right here seems they're holding the price up here. That's where most are willing to sell. And it can't go any higher. So this is the most traded area. What I'm going to do, I use break a structure, send it here. Got liquidity, 180.32. I might not get it, but it's possible. Let's see. Now I would have gotten triggered. Basically use the range. That would have been a 2.9, 2.95, almost 3. That's 3 hard. No, I did go to the actual bottom. Or did it? Oh, wow. Yeah. And I left a bunch of money on the table too, considering the target was 173.73. Pretty far out, but I played it safe within the previous swing range instead of being in no man's land where here would have been fine. But at the same time, there was nothing down here. All the liquidity was here. It's something to consider, something to have in your toolbox. Other than that, that's all I have for you guys today. Just want to make sure that y'all understand the trick and follow the strategy as far as your rules, your plan. Read the market, follow the candles, the bodies, tell the stories, and the wicks are just entries and exit points, right? That's how it works. The bodies tell the story.